Let's take a look at some of the most important charts from the Q3 2020 review article. So admittedly, DeFi exploded all over everybody in Q3. Violently exploded all over everybody, both in good and bad ways. That was really the story. I mean, I posted at the very bottom about DeFi, but really it was what drove most of everything in Q3. I didn't go into a lot of detail with the DeFi stuff, mainly because it's my personal belief that this stuff won't necessarily exist 6 to 12 months from now. It feels like most of it is flash in the pan, not necessarily a new paradigm. And if you look at comp, if you look at YFI, what's happening with those price-wise right now, I think the love is gone, you know? But looking at some of these charts, I always like to take the 1,000 billion foot view of what does the market cap look like? Even though market cap is a garbage metric at the end of the day, because if all these coins are pre-mined and they're being added to this metric, you know, if all the food tokens and these new scams are popping up and they're just lumped into this chart, is the market cap of the total everything really valuable? That's the question you have to ask yourself. So I don't know what TradingView actually includes here, but I'm guessing some of that isn't included because this would be, you know, if YFI was in here, which I don't know if it is, this metric would look different. This indicator, or this ticker, it's total, TOTAL on TradingView. So you pull this up. But if we just look at the quarters, and if we look at the 5,200 crosses, which is what I have on here, we're still bullish. We're still above the 200. We've been above the 200 since April, post-March dump, post-March violent reaction when sort of Corona finally became a reality for the US at least. We're still largely following legacy markets here in that we are buoyant, nervously buoyant, watching every tweet the president makes, seemingly market reacting in any way to the president's health, to stimulus news, to closure news, Corona vaccine news. All this stuff is playing a big role in crypto right now. As much as no one really wants to admit, we are extremely correlated with legacy, especially on a 90-day rolling basis. I'll show that in a minute, but all in all, it's unsurprising that we're bullish here if we are correlated with legacy, which is bullish as well. The risk for Q4 is we roll over and get a bearish 5,200 cross. The first negative sign would be crossing the 200, and then you get your death cross, which is what you don't want to see. On the other side of that, you can say, Josh, well, we've had death crosses 5, 6, 7 times over the past 2 years, and it hasn't really done much overall. You know, we're still technically in the range, basically since April 19. We haven't really done much. A lot has happened. There's been a lot of news and events, but at the end of the day, price-wise, since April, we've held 135 to 385 billion range, which is a massive range, tradable range, yeah, but nothing's really been accomplished. You know, we haven't really decided a trend one way or the other. It's just mega range. So it's always good to take a look. You know, are we surging above the 50 like we were in 2017? No. You know, we're in and out here. We were definitely bullish Q2, Q3, Q4 is a bit of a mystery thus far. And Bitcoin dominance unsurprisingly melted like a snowman in February, at least in some parts of the world, this quarter. It was basically flat until Q3 when all of the food tokens and the governance tokens and the yield farming and liquidity mining started. And people wanted a yield on their holdings. Outside influence, legacy people saw yield and dumped money into stablecoins. I'll show that in a second. And dumped those stablecoins into yield-bearing programs, AMM, which I didn't even mention in the article. Automated market making for various DEXs. So all of this stuff influences Bitcoin dominance, which again, at the end of the day, really isn't a great tradable metric. The altcoin people love it because they love to see Bitcoin lose dominance. The Bitcoin people love it because they love to see Bitcoin regain dominance. But at the end of the day, it really doesn't mean much, because if you're adding a bunch of pre-mined coins or coins that are created out of thin air, of course dominance is going to go to zero, because the denominator is stuff being created out of thin air. So once those new projects disappear, as they did post May 2018 when the ICOs stopped, oh look, dominance rose again, unsurprisingly. after April 2019, again, dominance rose. Bitcoin took over. Bitcoin's underperformed in Q3. It's definitely underperformed ETH. I don't know if it'll still underperform in Q4. I expect it to outperform ETH, actually, in Q4. I expect ETH to keep up, though, because of the proof of stake transition, if that happens this quarter, which it probably won't. It'll probably happen Q1, Q2, 2021. And just like any project that's migrating, there's going to be tons of articles, tons of hype, tons of activity. ETH scaling has been a concern this quarter. I'll show some charts on that. Obviously, ETH fees are the highest they've ever been. So that's just sheer insanity. I mean, I myself have had transaction fees on certain smart contracts in the hundreds of dollars, which is just unacceptable, really. for any normal person, they're going to just do something else. That's just unaffordable for most people. It really prices people out. So dominance fell, sure. Is it going to keep falling? Probably not. I think the DeFi moment, my opinion, it's going to start to roll over. Some projects are going to dissolve. And that happens. It's just evolution. At the end of the day, you get this explosion, this new idea. You get legitimate projects, you get scam projects. Some of those fall to the wayside, and what you're left with is the cream of the crop in a couple of months from now that are actually decent ideas. Will Sushi and Sushi Swap exist? I don't know. But some of these clear scams are going to disappear for sure. If we look at quarterly price changes, I talk about this a lot for BTC because it's so stark. Q2 is so obviously bullish. It's hard to go into the quarter thinking we're going to be bearish, right? The same thing with Q4. Q4 is less bullish than Q2, but it is way more bullish than Q3 historically and more bullish than Q1 historically. Q1 is not a great quarter, and neither is Q3 for BTC. So that's why at the beginning of the quarter, going into it, my mindset was I don't expect a massive lift in price for Q3 because historically that just isn't the case. You can say past results don't predict the future, whatever, but if you're treating this like a farmer's almanac and you just think seasonality, especially September, which historically is a terrible month, as is January for BTC, it's hard to be bullish just based on that, right? Yeah, you have your technicals. Yeah, you have DeFi and everything else popping off. But historically, September's been terrible. October and November, though, have been the best months for BTC, aside from April. April, October, November, all great months for price. This year, we have a presidential election in the US, so that will undoubtedly affect things because that will affect legacy markets. So once the dust settles on that, we might be good to go. It's not looking great for Q4 at the moment with Corona surging in the US, president getting Corona, the election still in the balance as far as who's going to win. When all that uncertainty is over, I think the market will become risk on again, but it feels risk off, certainly, because of the uncertainty. People don't like uncertainty. But historically, Q4 has been good. The past two Q4s have not been good. Yeah, and this might all sound like voodoo, but really, I'm just looking at big picture here. Q2 bullish, Q4 bullish, October, November bullish. So it's hard to be baseline bearish when you know that historically Q4 has been great for price appreciation. If we look at ETH, it's a little different. Q4 has actually been ETH's worst quarter, slightly behind Q3 percentage on average wise, but the most red quarters for ETH have been Q4, and it's never had more than 4 consecutive bullish quarters. Q1 and Q2 is really where ETH shines. It's hard because for ETH there aren't as many. If you look at BTC, look at all these years, right? 10 years of trading, tons of history. ETH, the history is kind of still being written as far as the trends and the seasonality, but Q4 is not typically the best quarter. Q1 and Q2 are where ETH does well, which would make sense again, leading up to this proof of stake migration. The other thing about ETH is the negative quarters are typically around 30 to 40%. So you can do the math on that as far as where we might end up by January 1st. But it's hard to think that, BTC will be this massive positive and ETH will be negative. I don't think that's necessarily going to be the case, but it's something to grapple with in your mind here if you're blanketly bullish BTC. But if ETH is negative, at least negative 30% is a fair estimate. It's definitely less clear as far as what's going to happen for ETH, just based on the amount of data points. And historically, it's just been bearish. I mean, it's already up over 100% this year. So to expect much more, I don't know if that's fair for ETH, but again, this proof of stake transition might be enough to tip the apple cart in the bullish direction. Now, if we look at Ripple and you try to make sense of this, all over the place as far as expectations. If you throw out the over 400% quarters, there's really not much going on for Ripple. There's a lot of negative or small positive quarters. Oddly enough, Q3 it probably has been the better quarter if you throw out the outliers. But if you look at ETH and you look at BTC and you compare this to Ripple, there's very clearly less of a correlation here with any quarter seasonality wise as far as what's going on. Most of these years have been on average loosely positive or negative, aside from 2017 where everything just exploded. If we look at especially the past 2-3 years, it hasn't been bullish at all. It's just been retracing 2017 continuously. So although the average is 206% for Q4, it's hard to think that that's going to happen. Anything above 100% this quarter for Ripple just doesn't make sense to me. One thing that will affect Ripple price is a Ripple the company ICO, even though it shouldn't affect Ripple the token price because the two shouldn't be related, but they are. Ripple's got all sorts of issues that I won't go into in this video, but the biggest among them being the 100% pre-mine that's being slowly and continuously dumped on everybody holding Ripple, as well as Jed McCaleb, one of the original founders, slowly and continuously dumping his Ripple. So it's really hard to be bullish on Ripple ever for those two reasons. And when I'm looking at this, trying to find seasonality and correlations, there just isn't any. If we look at BTC and ETH compared to other legacy markets, both have handedly outperformed oil, gold, Dow, Nikkei, S&P, NASDAQ, and most of those markets have exploded this year. And that just shows how much more explosive ETH especially has been over the past year and over the past Q3, Q2. If we look at BTC and ETH correlations to SPX and NASDAQ, you can see the surging correlation above 50%. It's come off over the past few weeks. If you go to a weekly rolling correlation, 30 period weekly correlation, it is near 80 to 100%. So we are extremely tied on a high time frame to legacy right now. The other thing I like to look at for legacy is the VIX, which is a volatility index, a fear index. And you can see since March, the VIX has been above 25. Historically, if the VIX is up, it is bearish for crypto. Spikes in the VIX have been buying opportunities historically. So if I want to be bullish, I want to see correlations come off of legacy, and I want to see the VIX go to zero. I want to see volatility and legacy decline. The big thing here is coronavirus. If the US ever gets that under control, I think the VIX will dissolve. But right now, the US looks like it's getting a second wave of corona at the very least, if not even more than that, around the world, just surging coronavirus cases. So again, market doesn't like uncertainty. Market doesn't like global pandemics, certainly. It's just bad for business, right? Switching to stablecoins here, stablecoins exploded this quarter and are at $20 billion USD total supply now. Most of that is Tether. We have Tether on ETH. We have Tether on Tron, Tether on Omni. You can see the Tether on Omni kind of dissolved and fades away as far as the slice of the total. And it's mostly Tether on ETH now, which is, again, part of the scalability problems for ETH is both the DeFi stuff and the explosion in Tether. If you look at all the stable coins, just to show Tether's dominance in the market, Tether on ETH, Tether on Tron, and USDC were the big three as far as circulating supply, active addresses, and daily transactions. DAI has also increased dramatically in circulating supply, active addresses, and transactions over the past quarter. Omni will probably disappear eventually. One thing I should probably ask the Tether folks is there plans to sunset Omni on Tether? At some point, it was probably cheaper to send Tether through Omni as opposed to ETH. The issue is that Omni doesn't talk to the ETH chain like ERC20 Tether talks to the ETH chain, which is why if you're using it for DEXs or yield farming or whatever, you don't have a choice, right? Like you can't send Tether on Omni if you're on the ETH chain. So even though fees were high, you don't have a choice. Now, if you're sending Tether from exchange to exchange, you can centralize exchange. You can use Omni. You can use Tron. Tron is the cheaper way because it's free. Omni is slightly more than Tron, but definitely less than Tether, ETH. That'd be my guess. And all these other stable coins really, at the end of the day, don't compete with kind of the big four. Really just Tether, USDC, and DAI are really the big three. And one other thing I've been watching for the past 2 years probably is Tether's price relative to USD. So people confuse the Tether peg with the market rate. The market rate can be 0, it can be 10,000. The peg is $1. If you send one Tether to Tether the company, you can redeem it for $1 forever. The market rate is decided on kind of supply and demand. It's decided on trust in Tether. We saw that a lot in 2018 when there was issues with trust in solvency as far as Tether and Bitfinex. Those issues have subsided, have abated over time. And what we're seeing since then is just the markets, what I'm trying to see, I guess, is the market supply and demand reaction to Tether. Since March, if we're bullish, Tether has been above $1, which doesn't necessarily logically make sense, but that's just how it's been. Bullish, Tether above $1, bearish, Tether below $1, bullish above $1. And again, we're approaching Q4 here with a potentially Tether below $1. Something to watch for over the next 3 months. If Tether's below $1, it's hard to be bullish just based on the trend since March. It's not a tradable metric on its own, but it's something to add to your belt here. And then quickly just addressing like on-chain activities for everything just exploded. BTC transactions up, daily active addresses up, ETH absolutely all-time high madness in transactions realm. Active addresses spiked to over 500K. That's come down since, partly because of fees, partly because of the attractiveness of DeFi waning. But most of that through Q1, Q2, Q3 was the new shiny stuff, the new yields, the new projects coming online. Very similar to the ICO bubble, where you couldn't interact with the ecosystem unless you bought ETH or transacted in ETH or had ETH for fees to transact on the chain. LTC as well. I don't know why transactions spiked. I haven't investigated that, but I will this week. And there'll be an article on LTC coming, but don't know why that spike is there. ADA spiked because of the chain migration. All of that has sort of waned and come back down. Link, also part of the DeFi ecosystem, went to an all-time high, massively exploded, bubble territory. All that has sort of waned as well. It's back to the July range as far as transactions per day and daily active addresses. So it's hard to be bullish on Link, seeing the on-chain activity decline. If we look at Tezos, it was a bit of a laggard, and you can see why transactions per day didn't really recover past the previous all-time high. So all the on-chain stuff closely follows price. And when you see on-chain activity below previous all-time highs, it's hard to be mega bullish. And now we're seeing multi-month lows in on-chain activity. So unsurprisingly, Tezos has just remained flat price-wise. Active addresses are certainly increasing, which is a good thing if you're bullish. But transactions per day have also followed price quite closely. Then if we look at mining, mining has also exploded. Bitcoin's hash rate, all-time highs, difficulty, all-time highs. ETH has surged in hash rate and difficulty mainly because of the fees on the chain. Miners are making mega money because of the fees. This hash rate is almost to an all-time high again. 2017, 2018, more so late 2018. Hash rate was this high again because of fees. If the fees are high, miners can add hash rate wantonly and abandonedly because they're getting paid extremely well. But once the fees come off, hash rate will and should come down because that'll just price people out. Mining on ETH will no longer be profitable. Dash hash rate difficulty also hit an all-time high. Zcash hash rate all-time high. Some of these projects had new ASICs come online, specifically Zcash. Monero, they switched their algorithm in November last year. So this hash rate looks like it's an all-time high, but it's a completely different algorithm, so you can't really compare the two. They did have this spike to an all-time high in the RandomX era, which was a cloud mining botnet situation. Still is a botnet situation with Monero. That's a constant issue. Monero is so good. It's great for ransomware. It's great for nefarious activity because it can't be traced. So you've got all these botnets around the world attacking all sorts of cloud infrastructure where they're secretly mining Monero and they don't know it. Or there's ransomware, botnet hijackers, all sorts of random stuff, cybersecurity wise, that is dealt with because of Monero's efficiency at sending transactions privately. All right, finally, DeFi stuff. Obviously, ETH locked in DeFi kind of tripled if you trust DeFi Pulse completely, which some of that stuff is triple or double counted. So it's hard to look at this at face value and say, oh, look, ETH locked in DeFi tripled. Well, kind of. Some of this is counted multiple times with flash loans or the same ETH locked in multiple places. So it's hard to look at this without investigating, but it definitely increased over the quarter for sure. And like I said, ETH fees went to insane levels, really pricing out a lot of people. Fees can sustain high levels if the speculative aspect of it is greater, obviously. So if it's $20 to send a transaction, but if I'm making 10x that on the transaction itself, what does that matter to somebody, right? And that's what we saw this quarter when average transaction fees exploded to mega all-time highs. Miners' total fees exploded for most of the quarter in the 5 million plus range. At one point, $16 million in a day were being made by miners on multiple days. So that's why, again, the ETH hash rate could explode, because there's no reason not to mine ETH right now. Fees are high, right? That'll go with any proof of work chain. If the fees are high, if the on-chain activity is high, miners can afford whatever the electricity costs are, whatever the infrastructure costs are, because they're getting paid so much more. It's just like the transaction fees and speculative thing. The costs are just, the risk reward there is just so much greater to just do it than to not. And then one thing that wasn't as loud, but did have a mega explosion, was BTC locked in DeFi through things like wrapped BTC, which is a way for BTC to interact with the ETH chain, much like Tether on ERC20. And this exploded from under 25K BTC to over 125K BTC. And that's certainly something to watch for throughout Q4. Will all this DeFi stuff continue? I don't think it will personally. It'll be bullish for crypto if it does. I think DeFi darlings are over. I think some of these projects need to decline in valuation. Some of these scams need to disappear. But with the US election, with Corona, with the historic Q4 seasonality for BTC, all interesting things to watch over the months to come.